And thank you for staying with us on Business Edge. Now, a new frontier has been opened in Africa for the use of stable coins with our blockchain backed tokens by stable assets such as the US dollar, euro, or even gold. Now, African countries that are suffering from a scarcity of fiat dollars, and we see companies looking for ways to solve the liquidity shortage. Stablecoins are literally the fastest growing subset within cryptocurrencies, accounting for 2 of the 5 largest cryptos as measured by market capitalization. Some have even described crypto as the default bank of Africa. What we are seeing is a growing number of companies on the continent who want to hold crypto on their balance sheets, not to remit it abroad, but to hedge against local currency weaknesses and then convert back to the local currency when it comes time to pay salaries and other expenses. But as we're also seeing this happen with stablecoins, there are also developments with 2 new Ethereum token standards. The new token standards proposed are extensions of the existing ERC20 and ERC720 and would now include the ability to reverse malicious transactions. Joining me now is the founder and CEO of Koinkoin exchange, Ola Atose. Ola, welcome again to Business Edge. Thank you for joining me.
Thank you very much for having me, Tolu.
So I'm really excited about the potential of reversing malicious transactions. But before we get to that, let's look at what's happening with stable coins right now in African companies across the continent. So stable coins right now are a solution to apparently the Forex situation and scarcity that many companies are experiencing. So how is that?
Yes, so we find that a lot of international companies, some local companies, of course, are choosing to use stable coins as a means of hedging against inflation, but also as a store of value. As it's become more and more difficult to get dollars, a lot of companies are just choosing to hold USDT typically, at times USDC. And hold on till they need to liquidate, as you say, to pay for invoices, to pay salaries, and of course, to pay for any, goods and services which the companies need. Again, I think one point to just make is a lot of the companies that we see doing this currently are multinationals. They are savvy enough, they have some understanding around how stablecoins work. They typically choose their own custody system, where they have their own wallet system. They simply just provide us with an address in most cases and choose to sort of hold USDT, as is the case mostly. And then, of course, when they need to sort of pay out in either Naira or CDs or some of the other local currencies, then they just simply ask us for a price and we liquidate their holdings. So it's working really well for them. It's easy to get. It moves really quickly. And it provides, again, obviously the underlying blockchain technology is actually much more modern and much more easy to access than SWIFT, which the banks depend on. So we're finding that companies prefer it.
Okay, so what we're also seeing along with this, as I said earlier, is that the stable coins are the fastest growing subsets of cryptocurrencies. What's really driving that growth? What's behind this surge we're seeing?
I think there's a number of factors. I think the first factor, would have to be inflation. A lot of the local currencies, all 48 of them in Africa, have suffered a lot in recent times, largely due to the tightening by the Fed in the States. A lot of our currencies, here in Africa have lost value, are continually losing value. So what companies are looking to do it's sort of, hedge themselves against that. USDT is one, such a coin which allows them to do that really quickly. And also, one thing that we've also found is clients have started to realize that as part of their sort of, Pan-African, business here in Africa, they're able to use USDT as a store of value and a means of transfer of value between themselves and their clients. So we have some clients who sort of have businesses across Ghana, Nigeria, Cameroon, and what they tend to do is use USDT to get value from point A to point B. And it's a lot quicker. The cost to do so is a lot cheaper. And of course, they're able to do it themselves, and there's less reliance on centralized banking institutions.
Okay, so there's been said there about a few stages of this whole situation. So phase one of the crypto adoption was techies who were buying Bitcoin, and we've been past that. Then phase two was adoption by retail investors, the everyday person buying a broader spread of cryptos. Then phase three takes us to an entirely new direction, commensurates with the rise of the stable coins as we're discussing, and of course using that for corporate treasuries and institutional adoption. So what do you think, or where do you think Africa is along this sort of timeline in this stages? Are we fully in stage three? Is it even a uniform kind of development we're seeing of the cryptocurrency space, of even the adoption of maybe stable coins for multinational use across the continent?
Well, I'll probably say phase three has definitely started. We've certainly seen a lot of it over the last 12 months. Um, but I would say it's still in its early days. And there's a number of reasons for that. A lot of companies, a lot of individuals, a lot of corporations still don't fully understand how stable coins, work. How to cash them out into real fiat, for example, is a big question for a lot of people. So I think we're still in the early stages. Yes, the value is there, and of course, USDT has proven itself to be a very stable coin, if you like to use the term. It doesn't fluctuate. It's pretty much as good as you get one to one for the US dollar. So yes, of course, it does work. And a lot of companies who are aware of the benefits are continually using stablecoin, again, as I mentioned, as a hedge to inflation, a means to store value, a means to send value to their own clients, and they're starting to use it to pay for goods and services. So yes, I would probably say, based on your definition, we are in phase three, but only a few companies have really started to do this. There's still a plethora of companies across Africa who are not savvy enough, don't fully understand how stablecoins work. Some are a little bit wary of getting involved. Some still see stablecoins as cryptocurrencies. Of course, stablecoins are not cryptocurrencies in any way. Some feel that it's not, they're not regulated to say use, stable coins. But those who know the value are starting to use it. What we're finding is a lot of companies are, speaking to their own clients, speaking to other companies, and the word is getting around. I mean, it's purely, word of mouth. People are telling people. We as a company, Koinkoin, we do advertise our corporate offerings where we're able to assist companies to sort of hold store. We provide, traditionally regulated, custody of stablecoins for clients who wish to do so. So the services are there. Liquidation for stablecoins is there into local African fiat, and of course into international currencies or G3, USD, Euro, GBP currencies as is required by the client. But what we find, and I think this is probably one of the major benefits, is USDT allow businesses to hold more of their value. They're paying considerably less charges than they pay with banks, for example. So in some cases, banks, traditional money transfer can cost, these businesses up to 10% of their value. With things like USDT, they're paying in some cases less than, 0.5%. So it's really cheap. It's easy to get. It moves very quickly. Within minutes, it's in your wallet. And you can liquidate it also just as quickly. So it's something which provides additional value. More money is, staying on the continent, if you like. It could very well be the beginning of a Pan-African currency, which is obviously something we've discussed before. On this show, albeit the USDT is backed by the US dollar, we certainly see stable coins in the future potentially being backed by African minerals currencies, or perhaps African natural resources. So
and I think that's going to be, that definitely is going to be an interesting future. So, Ola, before I let you go, I need to touch on this development with Ethereum. And it's very interesting because most of the conversation around the crypto space has been on the anonymity, the irreversible nature of things. It goes and it's gone. But there are two Stanford researchers who seem to have been working on an extension of Ethereum tokens that could have reversible transactions, particularly malicious transactions that are basically because of the thefts and some of the hacks that we've seen in major times. What do you think about this?
Well, I mean, I think it's certainly something which is worth discussing. Obviously, it's been built upon an existing protocol, ERC20, and the idea will be to sort of, give, a panel of judges the ability to sort of look into a transaction if, there's a claim that there's been theft. And of course, there are two parties, one, party claiming there's been theft, and the other party who's received funds. In theory, it sounds like a good idea. And I think it leans more on sort of, the way things are done traditionally, like a chargeback, for example, right? If your credit or debit card is used without your permission, chargebacks, can be employed, and banks have the ability to reverse transactions. So I think the same sort of mindset has been applied to, these two protocols which have been created. I think the industry, cryptocurrency, not just cryptocurrency, but the blockchain tech specialists perhaps will have a slightly different view on how that should work. And in the spirit of what, the permissionless structure of blockchain is, the view would be to perhaps, maybe perform further research and try to understand a little bit more how we can continually use the blockchain, continually ensure that it's permissionless, and we don't necessarily have to depend on specific judges, if you like, to look at specific.
I want to break down the steps, because you're getting into the decentralized judges that are part of this. So I want to quickly break down the steps for the audience on how the researchers said this could possibly work with Ethereum extension tokens. So the proposal allows reversals only if approved by a decentralized quorum of judges. So the victim would request to freeze the stolen funds so they don't leave the accounts they're currently in. Then the decentralized courts of judges would quickly vote to either accept or reject the freeze based on preliminary evidence. If accepted, the freeze is executed. Now, this process will differ based on what token is involved. Then judges would vote to revert or unfreeze the funds given the evidence submitted from either side. And the last step is, if reversal is agreed upon, the frozen funds are sent back to the victim and, quote unquote, justice is restored, as we hear from the researchers. So I think my biggest question would be, as we wrap up, would people even be interested in this sort of system coming into play for Ethereum, for any of the cryptocurrencies, even on the blockchain? Is it a system that you think people would welcome? Because the researchers are presenting a paper on this in November. So there seems to be some kind of conversation happening around this.
I think there could perhaps be some room for this to grow. And I say that because there is obviously a demand of traditional industry, those who ensure, blockchain services, for example, to find a solution to theft and some hackers and what happens, what we've seen happen, on the blockchain. So on that basis, I think it could be welcomed. It could be welcomed by elements of the industry, but I still think it's early days, and there'll be other players who have slightly different views on how this can be done. So a good point to make would be, there are instances whereby on-chain, transactions where there's been theft are moved off-chain almost instantly. And in those sort of instances, how will this process, of judges work, right? So there are some questions, but like with all, researches and, new technologies, I think we need a bit more time, more research is needed to really try and define what we can do to ensure that the very spirit of what we're trying to do with blockchain, being permissionless and not sort of giving any centralized entity authority, I think it would be worthwhile to investigate it further before making a sort of final call that this is the way forward. Okay. That said, it would be possible to have judges, if you like, or automatic, judges, or some form of AI that can actually, look at these transactions and look at the merits of, the evidence that different parties will provide. But that then takes the conversation to a whole other level.
A whole new world.
Yeah, exactly.
All right, so we're in a new world now that many of us still have not caught up to with blockchain and cryptocurrency. So please just wait before we get into AI judges on this whole thing. Let's slow our roll a little bit. Ola Atose, thank you so much for joining me. It's always a pleasure to have you as you bring the rest of us up to speed, dragging us into the fourth industrial revolution and into the future of things with these conversations. Thank you so much for your time.
Always a pleasure. Thank you.
Thank you. And it is definitely a beautiful new world. And as many of us are still struggling to simply understand the cryptocurrencies and what's happening there, many are trying to move to the next level with even having decentralized judges quorum. Definitely one of interest that you may want to read up on. You're watching Business Edge. We're going to be wrapping things up, and we'll do that with NC4 to watch. And with NC4 to watch, here are the stories we're tracking now. The Committee for the African Continental Free Trade Area has said that Nigeria will be participating fully in the agreement by the last quarter of 2023. Once the country has set in all needed trading documents and they are fully gazetted, Nigeria will have the green light. The shilling has plunged to an all-time low against the dollar, signaling inflation and higher costs of imported goods. Data from the Central Bank of Kenya shows the shilling exchanged at an average of 120.59 Kenyan shillings against the dollar, setting up the country for more expensive imports, electricity, and debt servicing distress. South Africa's foreign direct investment inflows dropped in the second quarter of 2022, while household debt levels rose and consumption expenditure slowed. Data from the Reserve Bank shows that household debt as a percentage of nominal disposable income edged higher to 64.6% from 64.3% in the first quarter. And finally, Egypt's imports have deteriorated even as the country's foreign exchange has run short. The war in Ukraine has deepened Egypt's economic issues. It sent the imports-reliant nation's bill for wheat and oil soaring, and with it, the need for dollars, and has crushed tourism from two of its largest markets, Ukraine and Russia, a key source of hard currency. And those are a few of the business developments we're keeping our eyes on right here on Business Edge. Don't forget to join us 11 a.m. West African time, Monday through Friday, where we put African business, the economy, and finance front and center. Follow News Central on social media, download our mobile app, watch us live on the platforms we're available. And of course, if you have to be on the go, do it with the app and also watch us live on YouTube. I'm Tolu Lokwe Adeleru Balogun. Have a fantastic day.